Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our commodity technical analysis update. We'll take a look at the dollar 10-year yield. We're going to do the 30-year yield this time and continue to look at precious metals and some of the other areas. And I'll give you my financial opinion. So let's dive in here. Let's take a look at the dollar first. This is a relative strength indicator. Now, been doing a lot of thinking on a lot of different things about the markets. Here's the dollar. The dollar has been going higher. We've got a nice little move today. Well, not really little. It's somewhat big, 0.5%. But we're heading higher. We've got that resistance line right above us. But on a monthly basis, we're moving up quite a bit here. And we're going to attack this resistance support level that we've used in history. If we break that, we could see a very big breakout to the upside. And what that means is that the dollar is stronger than other currencies around the world. It's probably related to the problems of energy crisis. This is a very complicated problem that I don't know if we've seen this type of environment ever. We have very large energy crises across the world. I'll go into that and show you what that looks like real quick in this update. And we've got stimulus money that's been chucked all around the world. And I don't know if we've ever had to shut down the economy like we have for the medical event. So we've got all these supply chain disruptions. We've got a bunch of money in the system. And we have an energy crisis. An energy crisis that I think's bigger than anything that we've seen before. And I'll show you a couple of natural gas prices that they're just going ballistic. So we've got the DXY, it's higher today. Looking at the 10-year yield, the 10-year yield is increasing. Now, we've had the S&P 500, that was lower. The NASDAQ was lower. But we've got an increasing yield. People are not running to bonds, they're running away from bonds. What the heck is going on, right? Now, I did say that money's going to rotate. And that money is rotating. It's rotating into the dollar right now, I think. It's not going to bonds. It's also not going to stocks. That dollar's getting stronger. I think it will end up in energy, precious metals, and those types of areas eventually. But we've got an increasing 10-year yield. This is bond prices on the 20-year. That is declining today, down 1.6%. Bonds are getting smoked to the downside here. They're getting ravished to the downside. And it looks like further downside will continue in bond prices. So higher yields, lower bond prices. Now looking at the 30-year yield. This is the 30-year yield. We have a major breakout that occurred in April of 2022. It broke to the upside of this long-term downtrend line. It's broken to the upside, and we are still working our way higher in the 30-year Treasury bond yield. So we're seeing yields increase across the entire curve. We're seeing bond prices fall. The CRB index is remaining resilient here. It is up today. Will we get a pullback in commodities? I'm not 100% sure. We've got a broken down trend here. Could this be a kind of a wedge-shaped pattern that's developing? Channel wedge shape that we break? I don't know. We'll see. We'll see. But overall, commodities are looking extremely strong in the face of increasing interest rates, which is what we thought was going to happen. And then we've got gold. Gold is heading lower. Gold is heading lower. It's coming back to this trend line. We're right on the trend line now. Silver's pulling back with good momentum. And so is platinum. These guys don't like higher yields and higher dollar. the DXY. They don't like that. So we're getting a pullback there with that higher dollar. Those dollars, people are running to dollars for safety. They probably don't know what to do in this type of environment. And I'll be honest, it's a difficult environment. We've got higher yields. We've got bond prices selling off, which means money's rotating out of bonds. It goes to the dollar first, then it's going to rotate to something else. I think it will be oil, energy, those types of stocks. The XAU to gold ratio was falling today. Again, we're still above that downtrend line. We've got another support line coming here that we do not want to break. We're right at that support line. If it breaks down, we could see further, obviously further downside. GDX heading lower. We're coming back to that support level. And SILJ, another one that's heading lower, coming back to that support level. The support level is this level down here that we've used a couple of times for SILJ. GDX is this support level that we used back here. This is a very strong support region. This region in here is very strong support. So I suspect below us for GDX, the miners, we have strong support underneath us. Going to crude oil. Crude oil, zooming in on it, we are still above this support line with a bloody nose today. That is usually an indication that we could potentially head higher. Now, I grabbed this from, I think it was the Fed meeting minutes. Let me back out, and I want to read something. It says, participants remarked that although in gasoline prices would likely help produce lower headline inflation rates in the short term, declines in the price of oil and some other commodities could not be relied on as providing a basis for a sustained lower inflation. As prices could quickly rebound, participants also noted that the high cost of living was especially a great burden on middle class. So oil prices, they're expecting oil prices to potentially rebound quickly. Probably from the SPR releases ending. They know that this is probably going to rebound. Natural gas prices, looking at this, up 1.16%. We are way up here. I don't see the selling pressure yet. Doesn't mean we can't pull back. We could break higher. Now, zooming out, is this the accumulation cylinder? The accumulation Livermore cylinder. This is 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6. Is this 7 here? With a potential break higher. We'll have to see. I'm not going to sit here and claim that I know what the short-term price movements are going to do. I don't. But Livermore cylinder, we could be breaking to the upside. If you look at the TTF Dutch natural gas, my Lord, look at this chart, guys. Let's go to the dailies. Well, we'll go to the weeklies here. This is the weeklies. This looks like it's in an uncontrolled movement higher for natural gas in TTF Dutch. That is rocketing higher. I think that this will drag the natural gas prices at Henry Hub higher. If you look at UK's natural gas, UK gas futures is right here, UK natural gas futures. This thing is rocketing higher. It is moving on up drastically. So we've got these drastically moving higher. I think it will drag us higher along with it for natural gas Henry Hub in America. And we could potentially go a lot higher because everything's moving higher. Now, XOP, yeah, you know me, a little bit of a down day today. I call it a bloody nose. It's a continuation pattern to the upside. And let's hope that momentum can continue. It was just a small down day today. OIH, which is the energy service companies, another small little down day today. We're right on support. The support line going across here is this upper support line here. We used it as a support there and resistance coming up. And we're right there on it. Looking at uranium, we are still coiling up inside of this pattern for the futures prices. We've got the Sprott Physical Uranium Trust. That guy sold off today, but we're still above support. We got to see what happens these next couple of trading sessions to see if support holds. Uranium also sold off, and we got to see if this support level holds. But we are very cheap at this moment. Looks like CCJ sold off quite heavily, and we have to see if this holds up or if that momentum is going to continue to the downside. Looking at TAN, which is the solar, they were also down. Much of everything was down today. Big sell-off across the board. DXY higher. People shifting to the dollar, apparently. But this still looks good as we are above the breakout, and we could see a return move back to the breakout, a retest move. COPX lower today as well, just kind of moving sideways. Doesn't look too bad. We've got the CRB to S&P 500 ratio breaking to the upside. That is positive, very positive. We could see another continued run of outperformance of commodities in relationship to the S&P 500. We've got rare earth metals breaking to the downside here. It's trend line, short-term trend line. So that is a little bit lower. We'll see what happens next. Lithium ETF also breaking lower. We still have support underneath us, but a big down day today with a large gap down. The S&P 500 selling off. Pretty strong downward momentum day today. Again, I'm gonna watch and see what happens next. We also saw that the U.S. Composite Index pulled back, and it's doing a retest of this kind of breakout. Will this break lower with the S&P 500? We'll have to find out. But I do think that higher yields are definitely a headwind for both S&P 500 and the U.S. Composite Index. Higher yields are, I think, pulling these lower. Now, a stronger dollar is going to push the emerging markets a little bit lower in the short term. Breakout, is this the return move and then eventual move higher? Well, we'll have to see. XHB down along with everything else, down 2.83%, but still above the broken down trend line. We've got lumber way weaker today. Lots of momentum to the downside. This does look like it wants to head lower for lumber. We've got cocoa futures heading lower, but again, still above its broken down trend line. Wheat using this as support heading higher. We've got soybeans that are still consolidating in its pattern here. And we've got corn heading higher in its channel. Copper, I was surprised by copper. Copper up 1% today. The overall markets were pretty weak and copper's higher. That's an interesting mix right there. You can also look at the copper to gold ratio, and the copper to gold ratio was drastically higher. That is usually an indication of higher interest rates, inflation. Looking at Mu is down a little bit with the overall market. Still not a huge down day and not much momentum, so that still looks a little bit better than some other areas. Aluminum is still putting in that bottom. It was slightly down today, but it still looks like to me the momentum's shifting and it's just moving sideways, trying to put it in a bottom. And then we've got the Baltic Dry Index. That's definitely lower today. Still some fear out there, probably with iron ore and the overall markets with the recession. So that's what I see for today, guys. Oil still looks really strong, and natural gas. Those are, I think, the strongest sectors of them all. Uranium looking a little bit weak. A little bit weak in a lot of the other sectors. Obviously a little weaker in the overall markets. But I would say definitely the strongest markets right now is energy related with oil and natural gas, especially with those higher yields. So if you like the content, give me a thumbs up. Subscribe to the channel if you haven't. Subscribe to the website below, Platinum membership. We have a question and answer session coming up Sunday, 5 p.m. Don't miss it. Be a Platinum member. You can ask questions directly to me during that 5 p.m. Mountain Standard Time question and answer session for Platinum members. So we'll see you there. We'll catch you next time. This is Finding Value.